Hello and welcome to the week ahead video with me, David Madden. Now, before we take a look at the major events of next week, let's just take a quick recap of the major events of the week just gone. This here is the US30, and the US30, along with other stock markets around the world, came under major selling pressure at the beginning of the week. This was down to the news that there was a lot of speculation that the Federal Reserve might look to hike interest rates 3 times this year, and this talk, the first of those potential rate hikes, could come in March. And in turn, we saw a sharp move lower in the US30 along with other US stock markets and other stock markets around the world. But since then, some of that fear about a possible interest rate hike in March has faded to a certain extent, and in turn, we have seen a bit of a rebound in the US30. Now, it's worth noting, before we had this bout of selling pressure here, the peak that we saw in early January was at an all-time high. So the much broader trend for the US30 has been to the upside, while we continue to hold above the recent lows of 35,639. It's like that the much broader upward trend will continue. If we do see a continuation of this near-term rebound, we could look to retest this zone here at 36,953, and if we go beyond that, we could then be looking up towards 37,000. On the other hand, if you do have renewed selling pressure on the US30, it could look to retest this week's low of 35,639, and a break below that could see a target this region here at 35,405. In relation to the major announcements of next week, on Tuesday we have an update from the Bank of Japan. We have a statement coming out of the Japanese Central Bank, and the Japanese yen has seen a lot of volatility recently. Now, we can see here on the dollar yen that has come under a lot of selling pressure. This is partially down to the broad decline seen in the US dollar across the board, but also the Japanese yen has fared pretty well this week. I mentioned a moment ago about the fear and uncertainty running through stock markets as there is speculation the Federal Reserve might look to hike interest rates in March, and a couple more interest rate hikes could be brought in later on in the year as well. With that put pressure on global stock markets, that in turn pushed up the Japanese yen, hence why we've seen a sharp move lower in dollar yen. In fact, dollar yen has recently fallen to its lowest level since late-ish December, so that really underlines how bearish the recent move has been. While dollar yen continues to hold below these 3 moving averages, it's likely the near-term bearish trend will continue. A move lower from here could see it retest the lows of mid-December in at 113.13, and if you do manage to have a snapback from here, resistance might be encountered from this simple moving average here, which comes into play in around 114.56, and a break beyond that could target this zone here at 115.46. Now, as I mentioned, the Bank of Japan have their interest rate decision and their update on Tuesday. No traders are not expecting any changes to the interest rate. They'll be listening out for any commentary in relation to potential changes to their policy. Keep in mind, last month the Bank of Japan announced that we stop purchasing corporate bonds and also commercial paper in March of this year. But at the same time, they also extended the loan scheme to small businesses out until September. So it was more of a tweaking of their overall stimulus package rather than an outright curtailing of it. So that's worth keeping in mind in relation to the Bank of Japan. On Wednesday, we have UK CPI numbers coming out. As I mentioned, we've seen a broad weakness in the US dollar recently, but also we've seen strength itself in the British pound. Last month, the Bank of England unexpectedly hiked interest rates, and also there's been growing speculation in the last week or so that the Bank of England might look to hike interest rates again in the next few months, and in turn we've seen this sharp move to the upside in GBPUSD. In fact, the currency pair has recently hit its highest level since October, which really underlines how bullish the recent run has been. Now, on Wednesday, the UK CPI numbers will be in focus. We also have an update from Andrew Bailey, the head of the Bank of England. Now, it's worth noting that the most recent CPI numbers from the UK came in at 5.1%, its highest level in a decade. High levels of inflation have been a talk of the Eurozone and of the US and other countries around the world. So, while inflation continues to be high, we could continue to see volatility in currency markets. Now, if the GBP USD rally does continue on from here, we could look to target this peak here in at one spot 38.33, and a break beyond that could target this zone here around one spot 39.12. If we do see any pullbacks in GBP USD, we could potentially find support from this region here in at one spot 36.19, and a break below that could target this zone here of one spot 35.60. That's all from me. Thank you very much.
Thank you.